everybody. Well, it almost sounds cliche now, but it's certainly every day of 2020 we can say we're living in unprecedented times, and right now we're still seeing those historically low interest rates. So we have a financial expert on hand now to help you navigate what you should do in terms of refinancing, maybe even buying a home. Stewart Welch from the Welch Group now here to tell us what we should know. Hey, Stewart, good to see you this morning.
Good morning, Mike. I can remember back in March, we actually did a segment on this when the 30-year rate dropped to 3.2%, which was a historical low. And I said, you better hurry and go get that because these rates are going to go up. And then what happened was COVID. And COVID comes along and the Federal Reserve drops rates to basically zero. And we're seeing historically low rates that are actually blowing my mind. I cannot believe rates are low.
And based on what the Fed has said recently, do you expect that to continue for at least the time being?
Well, of course, I always worry that rates are going to rise, and there's some concern that we're going to begin to see inflation. So I do think that it is a decision point where people ought to look at the possibility of refinancing, or if they're thinking about buying a home, now it's going to be a good time. But having said that, I do think that there's a really good chance rates are going to stay low. The Fed is going to keep rates low for the foreseeable future, say for at least the next 12 months.
All right, so let's talk about this now. Let's just say if somebody's wanting to get a home right now, what obviously they can choose a 30-year, a 15-year, 20-year, or maybe even a balloon option there if they want to. What would be the best way to go about this?
Well, I think the first thing is let's take a look at the rates. It's the 30-year conventional rate is at an incredible 2.625, and the 15 years at a 2.375. So those rates are really low. So Mike, if it was just as an example on a 30-year mortgage, a $100,000 mortgage, your payments would only be about $400 a month. So I think the first thing is check, if you have a mortgage, check your current interest rates, and if there's there's very likely to be at least a point difference between what you're currently paying and these new low rates, you might want to consider financing. So do the math. And then I think the second thing is if you're a potential home buyer, I just don't believe there's going to be a better time, certainly not from a mortgage perspective. So it's a great time to get out there. Actually, the low rates have stimulated the housing market, so the housing market has actually been pretty strong.
All right, Stuart, we got to wrap real quickly, but so that 1% you're talking about there, we know they're going to be closing costs that you can add on or pay up front. It takes usually a couple of years to recoup that, so it was still worth it, though, in your mind?
Yeah, I think you still want to do the math, and you'll find out what your break-even point is. Typically, you'll want to plan to be in the house a minimum of 3 years, but to overcome any closing costs.
Okay.
But if you're planning on being there a while, this is really an unprecedented opportunity.
And I'm glad you added that last point, because that's what I meant in the question. If you're going to be moving in a couple of years, maybe it's not so much, but staying there a little bit longer, yeah. All right, Stewart Welch, thank you so much. Appreciate it.
Thank you, Mike.